Now, ULTY, the Max Ultra Option Income Strategy ETF, the ETF that pays weekly and currently has a distribution rate of almost 89%, has once again been dropping in price at least slightly. And once again, it has a lot of investors very worried and confused about what's going to happen next with this ETF, its income generation, etc. Now, I recently made a post saying that I don't really care if ULTY does drop in price from here. All I really care is that ULTY just keeps paying income more or less like it has been ongoingly every single week for just a certain amount of more weeks until I'm completely playing with the house's money. So in this video, I want to go over ULTY, its current performance, its current distributions, and some reasons we should and shouldn't be afraid of what this ETF has been showcasing as of recent. All to say that if you hold on to this one, like myself, definitely stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, just to make things very clear before anything else, ULTY or any other ultra high yielding ETF across the entire market is never ever going to be something that I personally use as a majority position in my long-term portfolio. My long-term portfolio, as you can see right here, consists of tons of different stocks and ETFs, but you will never find something that offers an ultra high yield making up the majority of my portfolio just because my risk tolerance is pretty low, relatively speaking. Now, that being said, I have had fun buying into names like TSLY, Coney, or even other ultra high yielders in very small doses, and playing with some higher risk strategies, seeing what they've offered over the past several years. It's been a ton of fun to do so, again, in very small doses. Now, as of right now, I currently hold just under 1,000 shares of ULTY, which again, relative to the rest of the portfolio, is very, very tiny of a position. But even with this size of a position, it's generating quite a bit of income on a weekly basis, especially for the small amount of money I've invested into it. So now that we got that out of the way, it probably makes a lot more sense on why I think the way I do about this ETF. This is not going to be my entire portfolio. I personally never ever would make something like this my entire portfolio, just simply because it offers too much risk, because the underlying holdings inside names like ULTY just have way too high of implied volatility. But just to go through some of the very basics, ULTY is an actively managed ETF seeking to generate weekly income from a portfolio of covered call strategies, each on an underlying security. ULTY also provides direct or indirect exposure to the share price returns of the underlying securities, subject to a limit on potential investment gains on each one. Now, ULTY's underlying securities are going to be changing ongoingly over time, but again, just generally speaking, these are single stocks like Affirm or abbvie. As of right now, it says names that do have very high implied volatilities, which means there's definitely going to be the potential to generate a ton of income based off of option premium. But again, there is going to be some risk associated with that. Now, as I film this video, ULTY is trading at around $5.50 per share. I started buying ULTY at around $6 per share, I think, and as of right now, across all my shares, I think my average cost is around $5.80 per share. Now I'm going to share with you guys my entire breakdown and where I'm at personally as far as my cost basis, with all the distributions included and everything, and again, my strategy moving forward. But unfortunately, to back up for a second, ULTY is now trading basically right where it was trading back in April at around $5.50 per share, going up as high as around $6.50 per share almost. Now, because of ULTY's option strategy, there is going to be a capped upside, which means if the underlying names go up very quickly, ULTY is not going to be able to get exposure to all that juicy upside because they're giving up that exposure for the juicy option premium. But when the underlying names have red days in the market, which to be honest, it's going to happen here and there, I'm guessing, ULTY is going to drop pretty hard with them. I mean, just since July 17th, ULTY's price performance is down around 14-15%, which is pretty bad. Now, the argument with names like ULTY, these ultra high yielding ETFs, is of course the fact that even though they drop in price, even if they potentially decay over time, ULTY, for example, has paid $7.43 per share in the past year. Now, based off the current price of ULTY at $5.50 per share, I don't know about you guys, but if you're telling me that you're going to pay me $7.43 per year, if I spend $5.50 per share in ETF, I will definitely take up that offer any day. Now, the reality is that if and when ULTY drops in price, we're probably also going to see some of the distributions get smaller and smaller. Again, I'm not hoping for that. I hope the distributions stay somewhat stable. That's really my entire play here, but it is going to be part of the reality with an ultra high yielding ETF like this one that has some underlines that might be struggling. Now, my specific strategy with ULTY has always been the same. Utilize a very small portion of the portfolio, never the entire portfolio with ultra risky names like this one. But my strategy with ULTY specifically is going to be and is right now buy around 1,000 shares, which I currently have at around $5.80 per share on average. Now, the cool thing about an ETF that pays such high yield like ULTY does, at least what it's offered historically, is that it's not going to take all that long at all, at least based off of the historical numbers, to pay your entire initial investment back and then to be playing with the house's money. Now you might be saying, well, that seems too good to be true. Has it ever happened with any other positions in the past? And honestly, in my real portfolio, I have a very small position of Coney and TSLY, which I've been paid back, if not my entire initial investment, very, very close to my entire initial investment in a very short time frame, which honestly still shocks me. Yes, within a few years, I've been paid back my entire initial investment. Names like Coney and TSLY, even though they've decayed over time, I've been able to average down and receive some massive dividend payouts, sometimes smaller, sometimes larger, and receive my entire initial investment paid back, which is pretty impressive. So because I currently own around 1,000 shares of ULTY at an average cost around $5.80 per share, am I saying that 100% certain I'm going to get paid back all my initial investment in 1 year, in 2 years, in 3 years? This completely depends on how large the distributions ongoingly every single week look like. But the reality is that just after a few weeks of investing in ULTY, my adjusted cost basis based off of the most recent dividends I received already went from $5.80 down to $5.41 per share. And at this rate, I would have my entire initial investment back after just around 50 or 60 more weeks. Now again, this is going to completely depend on how fast or how slow ULTY pays out distributions. Again, there's a lot of ifs in this strategy, which is why, once again, I'll repeat, I would never build out an entire portfolio with names that have this much risk associated with them. But with ULTY and other ultra high yielders, is there the potential at least to buy into some shares, get paid an extraordinary amount of income on a weekly basis, and even potentially get paid back your entire initial investment in a relatively short time frame? I would have to say yes, because I've already done so with several other names. Now, that being said, with this sort of strategy, it's extremely risky along with any other strategy within the market. So think hard, do your research. And I'm of course sharing only what I'm doing and where I'm coming from. All to say that because I'm investing a relatively small amount of money in this play, it's been super fun to follow along, whether it's up, whether it's down. I don't really care. Just hopefully ULTY pay me back my entire initial investment in 1 year, 2 years, and I'd be very, very happy. So now that I share with you guys my current thoughts on ULTY, the YieldMax Ultra Option Income Strategy ETF, and even share with you how long it would take me from here to be playing with the house's money, I want to hear from you guys down below. Are you currently buying ULTY, holding it, or selling it? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.